In terms of these market moves, we've touched on some of them, but let's start the clock and have a think about where we are here. Do we have any sense of panic in these markets? I know we'll talk about this more in 15 minutes or so, but I suppose it's worth us continuing to monitor this. How does the things are moving very quickly, and we are on the lookout for any signs of panic, I suppose.
Yet there isn't any panic. It's important to emphasize that despite the fact that US equity futures are down more than 2%, whether you look at the NASDAQ or S&P 500 E-mini futures are down more than 2% today, and yet they are higher than when the invasion started on Thursday. So overall, we are not seeing panic across markets. We're only seeing oil prices up about 5% since the invasion started. Yes, it's big moves, but not crazy out there. Now, it's important to emphasize that at the moment there's a lot of confusion, and the situation is evolving very rapidly. Just over the weekend, with the freezing of CBR's accounts and also some banks being blocked from the SWIFT system, we are worried about funding markets today. We are worried what might be the follow-through on that. But overall, I don't think there's a panic out there, and I think that markets will soon look beyond this with low confidence. I like very low conviction. I actually think markets will trade higher this week as they realize the Russian blow from the economic side is not very large. The main impact of Russia on the world economy is through commodities, and at the moment they are excluded from the sanctions, and they are exemptions.
And you wonder how the developments on the ground in Ukraine might influence that view, whether we see the various protagonists sticking to current plans or whether things change drastically. Let me ask you about energy markets then, Mark, because you mentioned, yes, oil prices only, quote unquote, up by 5%. That doesn't seem to chime with some of the news flow we're seeing, although important to make the point that commodities still not included in the sanctions, which maybe is why we're only up by 5%. And gas prices, yes, up 30% or so, 25 actually. That sounds dramatic, but we were down by more than that during Friday's session. So volatility seems to be one of the few things we can be confident of.
Very much so. And we've got to remember that we have an energy crisis in Europe. We've had an energy crisis in Europe since last summer. We talked about this all last summer. And, you know, obviously Russia has then struck on Europe at this most vulnerable time. And that's where it thought it had a lot of leverage in negotiations. So we have this backdrop already. The energy crisis in Europe is not going to go away. And that is feeding through to a food price crisis and obviously the big inflation problem. Those underlying fundamental problems have been there for months. They're going to be there for the rest of this year. They are made worse by this conflict. But the direct economic impact will not be that large outside the commodities avenue. So at the moment, people aren't going to rush to take risk. In fact, they are de-risking as they get worried. But overall, people are not going to be selling down assets just because of this conflict. They're going to be worried about inflation and commodities angle.
Okay, and we're going to talk more about this. And I know you have some interesting thoughts on FX markets, and we will talk with our guest around FX shortly. Mark, thank you for thoughts so far. Remember, you can get details from the rest of the Markets Live team. MLIV GO, that is the function to use on your terminal.